Welcome to the Gentleman's Tribe Show, where Brotherhood meets bold truth and we strip off the masks to speak into real challenges men face in business, in fatherhood, in faith, and in the fire of daily life. This isn't a podcast for surface talk. This is a sacred space for men building something real on the outside and from within. Whether you're leading in the boardroom, showing up at home, or standing at the edge between breaking and becoming, this tribe is for you.
What up, what up? We are back. Gentleman's Tribe Show. Another week, another great guys sitting around the fire, talking about the topics that matter most to men. And today we got a wonderful topic, okay? It's about mitigating risk. It's about protecting yourself, right?
Being prepared.
And that is insurance. So of course, I have to make this sound as exciting as possible. I was gonna start the show I'm here with a bunch of nerds. We're gonna talk about some. Yeah, I'm kidding. Freaking love you guys. But no, it's very real because there's a lot of risk. So, Ian, do you have any stories about any risky times you were in? Doesn't have to be insurance related.
Oof, I don't even know where to begin on that one.
Well, we did go to Florida State together.
We did. There's a lot of times I just don't remember them is the problem.
I guess that they don't have that. I'm pretty wasted insurance back in college, right? Just kidding. We didn't touch this stuff. It was just anyhow. I'll let that drop there. So anyhow, I was thinking about risks today, and it was because I was actually I was at my house today. Right, I got home from the gym, and I don't know what it is, but it seems like every 30 days, or like once a month, I can't put my finger on, but my wife's a little off, like and it's just a risky kind of territory.
Oh my God.
And so anyhow, okay, and we have a child, of course, and we have our son Liam, and we're reading these books, and we're teaching him all this type of emotional regulation and things like that. So we have this book we read to him. It's called Grumpy Monkey, and when you're reading the book, it's about this monkey that gets grumpy and everything. And then you ever feel like you have to go for the joke? Do you ever feel that, or is that just me?
No, it's you. You're special.
Anyhow, stuff comes to me, and I always hear my wife saying, "You always have to go for the joke, don't you?" I was like, "Hey, man, I can't help myself. This is just how I'm built." But I have shown restraint over the years, and I don't always go for the joke. And I tell my wife after the fact, and I'm like, "I didn't go for this joke, but this is what I was going to say," and she's always very proud of me. But I had one of these moments this morning, and I see my wife just, she's just, feeling a little down, right? And I look over to her, next to her bedside, and I see this, matter of fact, just because, I happen to be carrying a version of this on me. Anyhow.
What are the odds?
Grumpy Monkey. And I'm like, do I go for the joke? And I start reading her from Grumpy Monkey while she's like in her mood. I was like, how funny it would be, or do I just let it ride? And I was just like, it was about risk. What's the risk to reward there? You know what I did?
What'd you do?
I went for it, and she laughed. And she laughed her tail off, and it brought her up. Because of the way I did it. But anyhow, it was that moment of risk, right? So here to talk about many different areas where how do we mitigate our risk? Now we're talking about insurance. So I
thought you were going to suggest chocolate.
Chocolate, I could have gone that route.
I mean, you can mitigate the joke with the chocolate. Yeah. If one doesn't sell, you get the other one. Plan B.
I feel like there should be relationship insurance.
Ooh,
like if you really, it's the kind of thing where you could cash in and get the chocolates delivered to you right away.
I think they call that life insurance, though.
You know what? Maybe this is the formation of an app. Imagine you have an app you could go to. It's just like, oh man, I need to bring my wife's emotional state up. It's just like, you just click on chocolates, boom, delivered. But have like a list already set up.
Chocolates, diamonds. Yeah, I get the idea.
Oh, diamonds. Oh, that's gonna be expensive. Well, if we know any diamond dealers, then actually met one in the tribe the other day.
Yeah.
So, nice guest. Sells diamonds, so maybe we could link that up and make some money. We'll see about it. Anyhow, how's your week going?
It's going great, man. Having a blast. Hanging out with my son in the studio today.
Dude, I'll say this. So tell us about your son. Tell us about Brendan.
Brendan, 11-year-old, rock star student, athlete, loves playing flag football. Good kid. Other than that iPad he's probably holding in his hand right now.
Well, he's also built like a tank, and I don't know where you get that from. He's 11 years old, and look, I ain't the tallest guy in the world, but when an 11-year-old is like competing with my height, that's messed up, man. But anyway, he's a big
tall
dude.
Man one day. He's gonna be taller than me before you know it. I'm accepting that as a reality, and there's no insurance product for that.
You got him any sports?
Flag football at the moment. His first practice was last night. It's pretty wild. Watching him go up and catch passes and stuff.
Well, it's good when you're that active. Does he have any need for this book, The Grumpy Monkey, or is he doing okay?
Only when I try to take away the iPad.
Oh, okay.
Maybe we can substitute one for the other.
See, that's less risky because he's your kid. So
Yeah.
That'd be nice. You want to try this with your new wife?
Oof. I don't know how well that would sit. She'd probably laugh at me.
Maybe we should do it.
She might throw a joke and say, look, you have a self-portrait you drew.
You know what? Maybe we should do a show on just like awful relationship advice. You ever think about that?
The do's and don'ts. Dun.
Well, I know, but we play it off and just give awful advice for the whole show. So like we could start with Grumpy Monkey. Then we could say like, oh, if your wife's upset, best thing to tell her is don't be emotional, or like, calm down.
Oh, that's always the best one. Calm down. It'll be okay.
Man, we're going to, I don't know, this might get some liability. We might need insurance for the show if you were listening.
We do. That's like adding fuel to a fire. Just calm down. It'll be okay.
Anywho, we are going, I don't know, I'm in a playful mood today. What can I say? It's just because it went well with my wife, because I could really be down right now, have like a black eye, Just kidding, she doesn't hit me. Every once in a while it's a shoe, but I just, I'm quick. I got some agility. But all
Today
right.
you're picking on her, not your mother-in-law. This is progress.
I love my wife. I do, and sometimes my playful nature brings her up, and I'm just happy I was successful today in bringing her up when she's feeling a little down. I love you, Danielle. I can't wait to get home afterwards and hold you and see my kid. But all right, moving right along here. So we're talking about insurance today. Now you are not in the insurance industry, but you actually are in another industry that relies heavily on insurance. Just remind our audience kind of what you do.
I get to play Monday morning quarterback. I get to deal with it after the mess and comment on it. So I'm Ian Miller. I'm a personal injury attorney. I'm the founder of my law firm, Miller Trial Law, where we handle a lot of personal injury matters. So, for example, we handle car accidents, slip and falls, work-related injuries, medical malpractice, and we also handle first-party property claims such as homeowners insurance claims. If you have a leak or a flood or a hurricane causes damage to your house, we help out in those scenarios. So what we deal with is the insurance you had in place at the time of the loss, whether it's the car accident or at the time that your home was damaged, and we have to work within the confines of what you had. And that's why this topic is actually incredibly important, even though most people like to avoid the concept of insurance because it's just a premium you got to pay. But there's so much more to it. What you're really doing is guarding against a risk so that when the time comes, you need that insurance to fill in and take care of you after an accident or after some incident to your home. You're going to be adequately protected, and I can get you a fair resolution. So important.
It is, and also I'm a real estate attorney. So what we do at the end of a transaction is we issue a title insurance policy so people could sleep at night, so they know the transfer happened correctly. No one's going to come knocking on their door saying, "Hey, guess what? We're roommates now because I'm still on title and there's something missing." Well,
wait, hold on. So when I bought my house, like it's not just a guarantee I get the house because I paid the money and got the mortgage. You mean there's a chance like someone could take it back from me? Like
I got bad news for you, Jan. I'm your roommate now. I'm just kidding.
Oh man, it's college all over again.
No, I'm kidding. But no. Well, so if they miss, you're right. If they miss somebody on title, like for instance, if there's some sort of spousal interest, there might be a spouse out there of a former owner of the house that might have an interest in the property, and that is a cloud on title. So that homeowner could sleep at night knowing if there's a problem, well, guess what? We'll work this out in the courts, but you are insured. So you can sleep at night, everything's good. And that's what insurance is. You're paying it's allocation of risk. You're paying a premium for somebody else to deal with your worries. That's what's beautiful. Obviously, insurance manifests in so many different industries. We're going to have a chance to talk about a few of those industries here today when we bring in our guests on the other side of this commercial break. We'll see you soon. The Law Office of Brian F. Jacobo, PA, is a Florida-based legal firm that partners with individuals, investors, and business owners to help them navigate real estate deals, business transactions, and the sale or acquisition of high-value assets like yachts and aircraft. We offer strategic legal support at every stage, whether you're closing on a property, negotiating a merger, or scaling your company. For growing businesses, we also provide fractional general counsel services, giving you executive-level legal guidance without the cost of a full-time in-house attorney. Through our title and closing division, Esquire Closings, we handle real estate transactions across Florida, delivering a smooth, attorney-led experience from contract to close. We're here to make your big moves feel simple, secure, and smart.
At Miller Trial Law, we're more than just a personal injury law firm. We're your advocates during one of the most difficult times in your life. Whether you've been injured in a car accident, a slip and fall, at work, or due to medical malpractice, we're here to stand by your side. We handle the insurance claims and legal process so you can focus on healing. From coordinating your medical care to fighting for the compensation you deserve, we're with you every step of the way. Because your recovery is personal to us. If you've been injured, contact us at 833-MT-LAW for you.
Join us each week as we dive into the stories, struggles, and awakenings that shape us, side by side with men who refuse to settle, who are willing to feel, to lead, and to rise.
Welcome back. And now it's time to dive a little deeper into our topic. Now, with each one of these, our guests here today, I feel like this could be a show into ourselves. We're going to be talking about
For sure.
life insurance. We're going to be talking about health insurance. We're going to be talking about auto insurance. We're going to be talking about homeowners insurance, and even title insurance and things of that nature. But what we're going to do is we like touching upon the topics, and maybe another time we'll have some of these guests back and go a little deeper on it, right?
Yeah, it's really important that people understand what you need so that you're appropriately protected. There's risk out there all the time. Things can happen, accidents happen. You want to be prepared for them. No one wants that surprise when that day comes. You want to be prepared. So we brought on some amazing professionals in the insurance industry today who really are gurus at what they do, who can have a conversation and explain to you the difference. So you know what you want. So you know what premium you're paying for, what you get, what you don't get, and maybe what you do or don't need.
Yeah, and a lot of times these type of insurances are incidental to something that they must need, like car insurance or health insurance. Maybe they get it through their business or company. Yeah. But it's also kind of nice to just be aware of what exactly you're tapped into and dialed into. So without further ado, we introduce both of our guests. We have Mr. Jeremy Cohen.
Hi there. Hi there. Welcome, everybody. Thank you so much for the invitation to be here.
Awesome, Jeremy. Hey, first time on the show, Jeremy. Thank you so much for saying yes. Why don't you let the audience out there get to know you a little bit? Where are you from? What kind of business are you in?
Yeah,
Just
sure.
tell us something unique about yourself.
Okay, so I'm born and raised in South Florida, specifically in Boca Raton. Not many people my age are actually here. I wasn't a transplant from somewhere else. However, my parents are from New York, as many people are. Been in the business for quite a while now, started in the health insurance industry, specifically doing that as my core business around 2012, so a dozen or so years in the business. Have a family, young kids, as many of us are going through building our business. As you mentioned, all kinds of new things, all kinds of assets building that need protected, family that's expanding and changing that needs protected, business growing that needs protection. Maybe accidents occurring over time that need protection. So I find myself talking about insurance with people my age, as well as our parents now as they transition from working to not working. So insurance is a big deal all the time in my day.
So why insurance for you? What got you into this?
Not really sure how I got here. I was doing lots of things. I have a sports management background, thought that would be my life one day. However, that has quickly transitioned into my hobby. So my hobby is my kids playing sports now, really. But insurance is a thing I just kind of fell into. It's something I had learned a lot about. As we were talking about before the show, it's not something that is supposed to be understood by the average person, just like legal or other insurances, title work. It's designed for specialists, and that's how it happened.
Boom. That's awesome. And we have a returning guest. He was on last week, Mr. Bryce. I am not going to try to say your last name
Bryce
again.
Z.
You know, I had it down a couple times, but I'm sorry. It's just way too many syllables, way too many stuff going on there. We love you. We love you, Bryce. But man, maybe we could do a stage name. Like, you got that baby face, like maybe an actor, Hollywood, like a Tom Cruise, like we just change your name to like something. No, okay.
Bryce Z.
Bryce Z. All right, there we go.
That, Bryce Z.
So Bryce, we had a chance to have an awesome conversation last week, and you opened up a lot about that topic of that week, which was a very heartfelt and deep show we had last week. But now we're talking more about your technical skills, and so tell us a little bit about What do you do when it relates to insurance? How you got into the industry? What do you want people out there to know about you?
Yeah, so, last week we talked about grief, and that's actually how I got into insurance. Losing my mother in a car accident, I did receive a life insurance payout. And because, my mom had stacked uninsured motorists, which we will get into on her auto insurance policy, it covered my brother's medical bills, her medical bills, and, even more to the point where we received some compensation at the end for that. I learned a lot about the bright side of insurance when most people learn about the dark side of insurance. So that was my segue into the industry. I started in life and health, helping families and individuals with that. And I enjoyed it, but I didn't feel like it was my final destination, to where I transitioned more into property and casualty, where that's more along the line of your commercial, your business insurance for your property, your liability, your homeowner's insurance, your rental property insurance, your auto, your flood insurance, umbrella if you need that, your valuables, your boats. I mean, you name it, that's where I ended up transitioning to. And that's where I found a lot of joy, because I could help people in multiple areas protect their legacy, protect what they care about, and protect what they're building, whether it's a business, a family, a home, all of that. I mean, it's really important to mitigate and allocate your risks, and it should be a part of everybody's financial plan. It's not just some commodity, it's a part of your financial plan. So,
and that's a really great place to start, because I feel like there's a wonderful conversation here to be had. So we have the insurance aspect, and then you have the claims aspect. Mm-hmm. And let's specifically talk about auto insurance at this point in time, and bodily injury and uninsured motorists and these types of things. Those policies were in place for you. What, out of a very difficult time, what did that do for you personally, and maybe other family members, the fact that was in place?
Well, to start, I mean, when, somebody like my younger brother was in the hospital for, months at a time, those medical bills add up quickly. I think we were well into the six figures of medical bills, and, having that stacked with 3 or 4 people makes a big difference. So 250, 500, you times that by 4 vehicles, you're looking at 1 and 2 million in coverage, stacked up. And that was a big deal for us. And what it allowed me to do is, outside those medical bills, it allowed me, from the money I received, time to think, time to plan, and, not just grieve and go to work and be miserable and, just kind of go through the motions. It allowed me to be intentional and purposeful. And, I think that's really what it's about, is being there in the uncontrollable circumstances, the things you never foresee coming. And that's really what insurance is, that safety net for you.
Sorry, go on.
So I want to talk about, you mentioned this term stacked, and that is a term that is very strange to people. People don't understand it, where it applies. So let's take a second back and go a step back, because I know in Florida and in other states, you have to have insurance to drive on the road. Let's talk about what that insurance covers in Florida, because many clients of my law firm call me up after a car accident and they tell, oh, I have full coverage. Of course I'm going to get a settlement. I was injured. Let's talk about what these terms mean, so people really understand. Are they protected? How far are they protected? And then let's progress to and stacked coverage. So in Florida, when you say you have full coverage, what does that actually mean you have?
The minimum required by Florida law. That does not mean that you actually have full coverage for all the circumstances that can occur. What that means is you have the minimum that Florida law requires you to have, which is not actually full coverage. And I know that Ian can attest to this as well.
So full coverage just means you're fully compliant with the minimum requirements to drive on the road. Full is actually kind of empty, right?
Yes, very empty.
And so full coverage just means you have to have really just 2 things, right?
Bodily injury and property damage, and that's the very minimum. And there's personal injury protection that's involved as well, but the requirements are very, very minimum.
Yeah, so as I experience it with my clients, here in Florida at least, and it's different in every state, right?
Yes.
So in Florida, you have to have personal injury protection, which we call the acronym PIP, and it just provides you with $10,000 in medical benefits. It steps in the shoes of your health insurance. If you have it, it's subject to a deductible. Most people get about $1,000 or so deductible.
Yep.
And it covers those medical bills. But what if your bills are over that? It doesn't really cover that. And then apart from the PIP, the only other thing you're required to have in Florida is $10,000 in property damage liability to cover your car if the other person causes the accident and it does damage to your car. Now, if your car damage or if it's a total loss and you need to get a new car, 10 grand's probably not going to take you very far, is it, Bryce?
No.
And that's all you're required to have, right?
Yes.
There's no requirement that you have something to pay the other person a settlement for the injuries, for their medical bills in excess of $10,000, right?
No.
That's kind of scary, right? So what can you get? What's this uninsured motorist coverage? Tell us how that works and then explain to us the stacking.
Sure. So how uninsured motorist works is, when someone drives around uninsured, underinsured, and along those lines there, somebody that's uninsured can drive around, and if they hit you, you're not liable for somebody hitting you. What you're liable for is when you're at fault. So when somebody else is at fault and hits you and doesn't have proper coverage, well, how are you protected if you don't have what uninsured motorist is? So that's the most simplest way I can put it. It protects you from other people and them not being properly insured. And I know the statistics in Florida are crazy with people that are uninsured and underinsured. And, I can't sleep at night if I don't at least offer uninsured motorists to people because it's that bad. And the stacking provision is, when you have multiple vehicles on a policy, you can stack that uninsured motorist coverage, whether it's $10,000 per person, $20,000 per accident, amongst all of the vehicles. So just using that example, if you have 2 vehicles, you can get $20,000 per person and $40,000 per accident of uninsured motorist coverage, which in the event of a loss and a settlement, procedure of a claim, that does come in humongous handy. And, that's where IAN steps in to be able to help you out, is in those circumstances where, somebody was uninsured and you need a settlement because you were injured.
So what's so important about uninsured motorist, and this is something that a lot of people don't understand, is it steps in the shoes of the other person who caused the accident. You pay for it. You pay a premium to have it. It's an additional thing you're buying when you get your insurance. It means you're going to have to spend more money to have it. But when you have it, it's going to protect you, because if the person who injured you in the accident that they caused doesn't have bodily injury liability, doesn't have anything to pay you a settlement for the injuries they caused you, this is something you paid for that steps in their shoes and will pay you out up to the limits that you have, assuming you're injured enough. And so I stress to my clients, it's incredibly important you have this, because about 2 out of every 5 clients who call me, the other person doesn't have adequate insurance, so we can sue them, go get a judgment, but maybe they file bankruptcy, we probably don't get anything. And then they don't have this coverage. So all they get is the $10,000 for their medical providers to get well and $10,000 to get their car fixed, but nothing for their injuries. I can't really help them. They're not getting a cash settlement about 2 out of every 5 times. So the ones who have that coverage that you offer, it allows us to actually get something. It's sad when I have to tell so many of my clients, I'm really sorry, but you weren't appropriately insured. And the stacked is so important because, like you were explaining, if you have 2, 3, 4 vehicles on your policy, it multiplies that coverage. So if you get $50,000 in coverage and you have 2 vehicles, if you choose to stack it, now you have from 50 to 100. You multiply it by 2. If you have 3 vehicles, now you're at 150, and now I can really try to get you a nice pot of money for your injuries versus having to tell you, sorry, this PIP coverage is all you're getting. And I hate to do that. It's the hardest part of my job, but I have to do it with such frequency because so many people are not educated on this. It's to Jeremy's point. It's not really designed for you to know, and then you fall victim. And we don't want to see people fall victim. We want to be able to help people.
Exactly. And again, a lot of what are the biggest risks? The stuff that you're not thinking about that all of a sudden could just blow up your world. And Bryce shared a very personal story about how it affected his life. Was your situation? Was there also a life insurance policy in place, or was it just the auto insurance policy?
Yes. So this is actually perfect to segue into what Jeremy does a lot more.
Right.
My mom had a small individual life insurance policy that was independent from her work. She also had a group life policy, in addition to the common employee benefits that are offered at larger companies. So I received a small group life policy from my mother's work, and I received a small individual life insurance policy that she purchased separately. So using different tools and different insurance products, we were able to supplement a lot of the things that, like burial costs, medical bills, as I mentioned, and obviously recovering from grief and, like it helped me give me more time to think and plan about my next steps. But it was really that safety net when, your parents are supposed to be that for you, and that was stripped away from me. That was kind of that second layer of safety that ultimately propelled me forward to where I am today. So yes, life insurance was involved, and Jeremy can attest to what he does there with on the group health, group life side, and how that impacts people on a daily basis.
Jeremy, tell us a little bit about that, how the life insurance works, and how he mentioned individual and group, and give us a little education on that.
Sure. So life insurance, unfortunately, is a result of death. So the worst possible time that people are going through. And when people buy insurance, when I buy insurance to make sure that if I'm gone, that my family can replace the income that I was providing to my family. So for better or worse, when I sell life insurance, I often talk about people being the ATM machine of their house. And I provide money to my family each and every month to make sure that we can live a lifestyle and my kids can do the things and my wife doesn't have to marry the neighbor down the street or any of those kinds of things. Life insurance can be very complicated. It can be very simple. In its simplest form, it is there to replace lost money in the event of an unfortunate death. So where your mom was providing not only moral support, but financial support,
Yep.
That financial support is now stripped away. Well, life insurance is then able to replace that. Now, where do you get life insurance? As you've mentioned, there are multiple places. The two popular ones are at home and through your work. So many people, as part of the employee benefits package through their employer, have opportunities to buy group life insurance, like you mentioned. Also, many people buy individual life insurance to either supplement, or if they don't have it at work, to be that main source of replacement if the God forbid scenario occurs. Then within the individual, there are all kinds of life insurance. There is permanent insurance and there is term insurance. Very different, again, getting very technical, but the easy way to think of it is term insurance says if you die within the period of time, generally 10 or 20 years, those are the two popular terms, you get your money. And the minute you pass that term, something else happens. Permanent insurance is not if you die, but rather when you die. And so long as you continue to pay premiums on your permanent policy, it should be there until you die, whether that's soon or very far from now. The cost is very different. The strategy is very different. People layer, people stack. As your mother did, she got some here and some there in an effort to try and get as much that she can afford, right? There's still a risk. There's still a cost. But life insurance is one of those things. You are your family's biggest asset. The income that I generate for my family is our largest asset. If that's gone, it needs to be replaced, and I don't want it to be the neighbor down the street. I don't like him that much.
I also understand, and I was recently educated on this topic, but term is just going to be for a short period of time that you're going to have the insurance. If you select 20 years, at the end of the 20, you're not getting anything. It's just during that time period it's going to cover it. But I heard something about the whole life policy where it's going to cover you when you die, not if it's within that period. Some people actually use it as like a financial investment. Tell us about that. How does that work?
So within the umbrella of permanent insurance, there are multiple products. The popular product is whole life insurance. Whole life insurance has a life insurance component and a savings component. And within the savings component, a lot of tax-friendly benefit to using that money. Tax-friendly. Okay.
We don't want to avoid taxes. We want to be friendly with.
I do not give tax advice. I'm not an accountant. However, within the world of insurance, there are a lot of very fancy products that can be used in different ways. So whole life policy says a portion of my premium goes towards buying life insurance in the event of an untimely death. The other portion goes to savings, which I can use over my lifetime for various activities. And in the event that I live a very long life, the cash value or the savings component could pay the premiums. I could take money out to use it for big expenses or travel or medical costs that come during the later portion of my life. And there's still a residual death benefit when I die.
So you can actually pull some of this money out along the way if you need it. Fascinating. Someone approached me not long ago in one of my networking circles and told me like her parents took out a life insurance policy for her when she was a young child. And I'm sitting here thinking, what do you need life insurance on a young child? You're not supplementing their income. But then she told me as she got into her 30s, she used it. She pulled the money out to use to start her business with. And I was like, how does that work? Are you familiar with this concept?
I am. We love to share this idea with grandparents when kids are born. So take the scenario of a 20-year payment plan on a whole life policy. A kid is born, and let's say you put in $1,000 a year, or $10,000, or if you're wealthier, even more. Each and every year, the grandparent pays the premium, and at 20 years, the payments are done, or it's called paid up. The policy still grows and grows and grows and grows and grows and grows. So now all of a sudden you've put in $20,000 or $200,000, but the value of the cash is well above that. And now you're in your 30s, it's grown over a 30-year, 35-year period. You may find yourself with hundreds of thousands of dollars available to use. And maybe your parents were very good about utilizing some of the educational tools so that you're not buying your car at 16 and wasting the money, but instead it grew to this giant number. And now as an adult, instead of borrowing from the equity in your home or taking a loan or going after mom and dad's retirement assets, you now have this bucket of money to use.
That seems like
for that new purpose.
Such a great avenue for grandparents who, intend in their wills to leave money for their grandkids to do it in a so much more beneficial way and be a little more tax friendly, perhaps, in the process. And what I recently learned as well is it's based on the health of the kid versus the health of when that kid becomes an adult and acquires health conditions over their lifetime. Because, most Americans are healthiest when they're young. We tend to develop these obesity and bad habits and smoking and all the other things that throw off your rating once you're in your 30s and 40s. So it seems logical that you want to get it the younger you can, right?
100%. There is a medical underwriting component. And as you age, you get older and less healthy. And those are the two negatives to the cost of the premium. So a 1-year-old or 0-year-old, the cost of insurance is infinitely smaller than the cost to a 50-year-old who's unhealthy. So the earlier you do it, the more you can plan. Also for time horizon, your money has grown over a 35-year period versus a 2-year period or a 3-year period if you had just bought the insurance before you're ready to use it.
Is there an age like fine wine writer? Or I'm kidding. I'm joking. I think we all break down over time. I'm just being tongue-in-cheek.
The answer is become a marathon runner. Life insurance companies love marathon runners.
Run marathon runners. Well, that's going to be on my to-do list. Just don't tell my accountability partner yet because I got a few steps before I get there.
Yeah,
I got to train. But it sounds to me when I hear you talk, it sounds like it really depends on the client. There are some clients that might have certain needs, and it might be right, but I love the idea of the whole life, starting kids when they're young, because while there's different type, and I know it's insurance by the very definition, it's not an investment, but it does have this adaptability and this dual nature to it, to where maybe that is an attractive feature for when you even have a young child that could grow over time. So now, God forbid, nobody wants to be in a position where they lose a child, but later on that could pay dividends for your child, and they could actually receive a benefit if you plan in advance. Is that kind of what I'm hearing?
Oh, for sure. People talk about college planning, and there are vehicles for college planning, and people talk about kids staying on payroll, on the adult's payroll, till they're like 30 years old now. Right. It's pretty scary. I have 2 young children. I hope that I'm not paying for them into their 30s.
You're preparing them to be marathon runners, so it's going to be all right.
Or baseball players with major league contracts, one or the other. But having some of these tools available, now I don't have to support them. And as you said, my parents, who are looking to do things for my kids, and skip me at this point, can do some of these things in a very cost-effective manner so they can leave a legacy and do like true estate planning while they're alive, but also set my kids up now for 20, 30, 40 years from now. My parents, hopefully, but likely will not be alive. But their planning can pay incredible dividends. Another point is, for me today, my priorities are very different than my parents. Okay? If I die prematurely, I have to replace income for 20-something years for my kids. My parents are retired. My dad's semi-retired. My mom's retired. They don't have to worry about income anymore. So the amount of insurance that they need is different. They need it for when they die so that they can leave a legacy and maybe do some philanthropic things and some other ideas. But they don't need the volume of insurance that I need. I need a lot of money to replace my income. I can't afford to put all my money into a whole life policy right now. I have to take my money and put it towards buying a death benefit because my priority is getting my kids through middle school and high school and college, and I'm earning income, so it's replacing that. My parents have a very different strategy. So a whole life policy for my kid, while it sounds great, is not the best choice for me.
Right. It's different needs for different clients, and there's ever shifting needs as we go on through life. I do want to touch upon, and again, like I said at the beginning of this podcast or show, we could do a deep dive on every one of these topics as a show in himself, but I do want to touch upon a couple things before time runs out on us today, and that's health insurance and also auto insurance, about homeowners insurance. I do want to touch upon those before time runs out. So I think it's a nice pivot into health insurance. So we're talking about the life insurance policy, the finality of that. But also we got to keep ourselves up through our lives. And there might even be later term care that we discuss. Tell us a little bit about health insurance, and maybe there's a listener out there that's kind of curious about their own policy they get through work, or maybe they have to go find something on the exchange or find a different way to be insured. What kind of advice, or what would that person you would like them to know before leaving here today?
Thank you. Another one of it all depends, okay? Different situations require different plans. Most of the time we find that people are getting their health insurance through their employer, okay? So your employer sets some options, there may be 2 or 3 plans available. It's very efficient in terms of it's a pre-tax expense, it costs less money, generally the plans are better. Part of compensation, your employer subsidizes it. A lot of good reasons to get it through work. But not everybody has an employer that offers it. So if you can't get it through work, many times they go through the federal exchange, they go through a local agent to get something direct through the carriers. There's government programs, not named the federal exchange, to get health insurance as well. And although not required by law any longer, everybody needs health insurance. It is one insurance that I sell that someone could have a problem every single day. Okay? Unfortunately, life insurance, there's a finale, die, move on, and then life insurance. However, health insurance, every single day there could be something, multiple things. It's one of the most actively used insurance plans that we sell, and it comes in different shapes and sizes. Everybody uses it differently. Everybody needs different portions of it. Incredibly complicated, a million different nuances.
So incredibly complicated, and this is something actually I think it's probably appropriate for all of us to kind of speak about here. In a former life, I was in-house corporate counsel to a third-party administrator in the servicing of health insurance claims for international providers. As part of that position, I had to review a lot of policies. And this is something that most people don't really do. They just know they have health insurance. I'm going to put this for the panel. And, whoever wants to chime in here, any thoughts about how those policies are constructed, or what would you want the layperson out there know about how policies are constructed? So
I'm going to take this one because I have a joke that says your insurance policy on page 1 will tell you everything that you get, and the remaining 3, 7, 13, 47, 120 pages will tell you all about the exclusions and limitations of your policy. Code for what you don't get. And if you want to blame somebody, scan over to the lawyer This is legal jargon, okay? This is where the lawyers get in the way. But seriously, a general policy will describe for you your benefits on page 1 and all of your limitations going forward from there.
Those limitations are so important, and especially in the age of rideshare. Like I had a client call today who unfortunately didn't get the rider on their policy, and they were driving on Uber. And guess what? Now there's no coverage for them, and it was just a tough situation. These are just things you got to know. Like the guy was looking to make a few extra bucks driving as an Uber driver, gets hit by a drunk driver, and he didn't add it to his coverage. He didn't know you had to do that. There's a special rideshare rider you have to get. Otherwise, if you're driving on rideshare, it's excluded.
You have a problem, and also with stuff is that you have an expectation, right? In speaking, we're very technical here because we're in the industry to a certain extent, each one of us insurance, right? So we understand the specificity and those technical analytical details, but the average person out there that has to kind of weigh all these things on top of everything else in their life, when you hear I have, homeowners insurance, I have homeowners insurance, and then a hurricane hits, but there's a flood. Oh, I wasn't insured for flood, and now all of a sudden they have a problem. It's kind of, and I think it's a perfect place to pivot. So Bryce, you also do homeowners insurance as well, correct? Mm-hmm. So tell us a little bit about homeowners insurance, and what would somebody out there that knows they have a policy in place, what are some things that they may want to know?
Oh man, where do I start? I mean, I think Jeremy used a great example of the first page is what you get and what you have, and everything else is what's limited or excluded. And I think that's really important because I've had some of my clients that come to me and say they thought homeowners insurance covered flood. I said, oh, no, that's an entirely separate policy. Yeah. And they're like, so what do you mean? I'm like, if your roof leaks, that's covered under your homeowners. If your canal behind your house, floods over in a hurricane or a rainstorm, that's not covered under your homeowners insurance. That's flood. It's a separate policy. And that's just layer one of what really homeowners insurance and protecting your home looks like. I mean, just to get more technical, it's like you have water damage coverage, but it only covers certain instances of when water damage occurs, or there's a limitation on coverage. You won't find that on page 1. You'll find that on page 32. It's like if you don't read your policy and you don't have an agent that understands what they're actually selling you, you're not going to know. And I mean, this market in Florida is tough for the Florida watchers out there. It's definitely tough, but at the end of the day, it's about mitigating your risk. I always present my clients with a full water option, a limited water option, and a water option that's excluded altogether. Why? Because I can show them a range of premiums that help them understand that if you don't do this, you're excluding yourself from being covered for these circumstances. And that's one layer. Another one is very basic replacement cost versus actual cash value. A lot of people think everything's at replacement cost. That's not true. The dwelling amount, it's the amount it would cost to rebuild your home in the event it was wiped clean off the slab, whether in a hurricane, a windstorm, or a fire. If, that's at replacement cost on certain policy forms. Not all policy forms is it naturally defaulted to replacement cost. There's homeowners, there's dwelling policy forms, there's rental policy forms. I mean, you really need an agent that knows your circumstances and what you're looking out for.
It's so important, like, to your point, with these different types of water coverages. Like I have these in where I'm dealing with claims where someone has a water leak or a hurricane causes water intrusion into their house, and they had a water cap and they didn't even know it.
Yep.
It's so important you work with skilled agents, and that's why we're grateful to have you guys on today, because you guys take the time to explain the differences to your clients so they can make educated, informed decisions. So if a loss happens, at least they know what they're going to get and maybe why they're not getting something else. It comes down to premium. When you buy the house and Brian does your closing, you have a mortgage that's requiring you to get homeowners insurance. But what you're going to get is so different. It's not always just about getting what the cheapest premium is going to be. It's about knowing what you're getting. Is it really going to protect you? And nowadays we deal with something called managed repair, where repairs are going to get done by the contractor your insurance company picks if you choose managed repair. And yeah, it's a cheaper premium, but you might not be happy with the job they do versus them paying for you to pick your own contractor. There's so many differences in this, and it's not just about getting the cheapest one to satisfy your mortgage company. It's about making sure you're really protected. And one other thing I've seen recently a lot with the hurricanes, unfortunately, that wiped out a lot of the West Coast on Florida, people were getting homeowners insurance to protect their house, years would go by. The amount they were insured for, they would just keep renewing the policy.
Yep.
But the value of their house has gone up, but their policy, what it covers is like this. And so even if I get them the full amount of coverage, they're in a condo when they go to get a new house, not a house. And it's so important that you get with good agents who are going to explain to you, look, you're only insured for 300 and something thousand because that's what your house was worth back then. Now it's worth 600. We're not going to be able to rebuild. We're not going to be able to put you in a comparable house. You're going to be moving into a condo. You got to get with a skilled agent. It's so important.
And that's an excellent point, because there's actually 2 points kind of rolled into there. What I was speaking to is, it's not about the cheapest policy, but you really have to, even though it's easier to say, hey, let my agent take care of it, you really need to have a fundamental understanding, because you need to understand the policy and what you're getting, because then you could do a risk analysis. And now you could be true to yourself. How much risk do you want to take on? How much, is there other areas where you can kind of loosen up a little bit, because you're like, and weighing this, I'm not as concerned about this. But there might be areas like, you know what, maybe I don't have enough coverage here. Or maybe I needed a policy to cover something that this policy doesn't cover that I thought was covering that policy. So I think that's an excellent point. And also the other point is that absolutely, inflation, guys, it's not just about getting your insurance. It's also wise to review your policy periodically with an agent you know, like, and trust, because the game shifts. There might be, we live in a state of AI, for instance. The world's evolving. There might be other risks out there that other policies start incorporating depending on what situation you're dealing with, that maybe your policy didn't cover, and you say, maybe I need additional insurance. But especially when it comes to the homeowner's insurance, we have times of rapid appreciation in Florida. We have inflation that is being tempered now, but we went through high inflationary states the last few years, which we're still experiencing today. But you don't want to be in a position where you bought a condo or a house for $200,000 25 years ago that's now worth $700,000, and now a hurricane comes, you want to go buy another house, but you're stuck in a condo. That sounds like an awful situation.
Yeah, you could be insured for $200-300, and if your agent isn't sitting there advising you that, hey, your house is worth way more than what you're insured for, yeah, your premium's going to be cheap because you're insuring for a much lesser value. But hey, you might want to know what's going to happen if a hurricane hits. And by the way, Florida keeps getting hit by hurricanes, so be prepared.
So I actually want to chime in on that. So I had a horror story, kind of, if you will, where, a client was...
I tell you, sorry. Hold that thought. I'm sorry to do it to you, Bryce. We do got to take one more commercial break.
Okay.
When we come back, we're going to go right to you, Bryce, on that thought. See you on the other side of this break. The Law Office of Brian F. DeCobo, PA, is a Florida-based legal firm that partners with individuals, investors, and business owners to help them navigate real estate deals, business transactions, and the sale or acquisition of high-value assets like yachts and aircraft. We offer strategic legal support at every stage, whether you're closing on a property, negotiating a merger, or scaling your company. For growing businesses, we also provide fractional general counsel services, giving you executive-level legal guidance without the cost of a full-time in-house attorney. Through our title and closing division, Esquire Closings, we handle real estate transactions across Florida, delivering a smooth, attorney-led experience from contract to close. We're here to make your big moves feel simple, secure, and smart.
At Miller Trial Law, we're more than just a personal injury law firm. We're your advocates during one of the most difficult times in your life. Whether you've been injured in a car accident, a slip and fall, at work, or due to medical malpractice, we're here to stand by your side. We handle the insurance claims and legal process so you can focus on healing. From coordinating your medical care to fighting for the compensation you deserve, we're with you every step of the way. Because your recovery is personal to us. If you've been injured, contact us at 833-MT-LAW for you.
Join us each week as we dive into the stories, struggles, and awakenings that shape us, side by side with men who refuse to settle, who are willing to feel, to lead, and to rise.
And we're back. And we left off with Bryce going deep on a point. Bryce, please continue.
Yeah, so the horror story that I was getting into was kind of stemming from what Ian said about the guy that wanted to make a few extra bucks doing Uber and didn't update his auto policy. If he would have updated his auto policy and paid the extra premium, guess what? He would have been properly covered. So I have a story about a homeowner. He did a renovation on his house, added an extra room, renovated cosmetically the entire house, replaced his roof, added a pool, added a screened enclosure. He did all these things and never updated his insurance. Had a fire in one of the old parts of his house, burned down the addition, burned down part of the screen enclosure, and burned down most of what he actually renovated. And guess what? Because he never updated his client, he wasn't my client at first, he came to me after the fact. He went through the claims process and everything, but he was not adequately covered. He was short at least $125,000 on his coverage because he never updated everything that he did. The additional square footage, the renovation to a fully custom kitchen was just not covered. It was not enough in there. The pool and the screen enclosure, they were already limitations on that, and since it wasn't included in the policy, guess what? Nothing. It's really important that you have an agent that not only looks out for your best interest, but secondly, is willing to do those reviews and ask you the right questions, to make sure that your policy's up to date, because when, crap hits the fan, if your policy's not up to date, the insurance company's going to go based on what you had at the time of the loss, not what you actually have now.
Before we go into our final thoughts here, because we're in short of time, I think it's just too important. So I'm going to take this opportunity to ask both of you gentlemen here on the show here today. You guys are agents that are in the space that have that personal connection with your clients. I think that's something admirable that I think it might have been lost somewhere along the way. I know I didn't have that experience until I met you guys and I do personal business together. How could the audience members out there, how could they reach you if they're listening to the show and they say, hey, I want to have that type of relationship with my agent? We'll start with you, Jeremy, and then we'll go to you, Bryce.
Yeah, sure. So as you mentioned, we do a lot of free audits. We don't charge anything for our time. So we do a lot of free audits for people who have insurance, like life insurance, for years and years. We get an illustration. We kind of catch them up to where they are versus where they thought they were and how this plan is going to look in the future without any changes. And then go through the whole, decide if we need to make changes based on life changes or income changes or needs or any of those things. So if anybody out there who's listening who may want to have that conversation with me, please try me at my office. It's 561-353-1234. My extension is 115. I'd be glad to talk to you, walk you through, show you what you have, and make sure that it is what you want.
Perfect. And Bryce, how could our listeners reach you?
Yeah, so I'm just going to second Jeremy's point. I don't charge for my time. I do free consultations on any line of insurance, whether it's your business, your home, your auto, your flood, umbrella, any specialty insurance, which, please give me a call on my cell phone, 302-660-1913, and I'd be happy to go over all your different insurance with you and make sure that, to Jeremy's point, you have what you want and not what you don't want. And if you don't have something, we make sure that we get you what you need.
You know what I love about this? I feel like there's uniformity with the men at the table here today about how we have these client relationships. I'm a real estate attorney, and I believe firmly in educating the clients. As a matter of fact, my number to reach me, if you're looking to do a real estate closing, really in any state, I could do closings all over the state, but I give the same attention to each client. You could reach me at 754-222-5111. I'd love to talk to you. And what I believe in is when you work with clients, these are people stepping into a situation they're not quite familiar with. And I almost compare it to the great explorers of the world, whether they were European, Chinese, wherever it was. The maps looked different way back when. There was a lot of dark matter. Then over the explorations, all of a sudden the maps started getting filled in, and now you can better navigate the world because you now have the map. I believe, and I think we all do at this table, and you've illustrated that about the explanations here today, is teaching and showing the map for your clients. And now you are enabling them to be able to navigate along that map, make wiser decisions, know what to look out for, notice the dangers, and be able to prevent the risk for their particular family.
That's really what it's all about, is having the clients be informed. You don't want to make a rash decision. It's not just always about doing the cheapest thing. It's what's really best for you, but you need that in an informed setting so you can make an honest, good decision and then be prepared for whatever comes. I'm here to help people who've been involved in a car accident, any type of injury, slip and fall. If you're not happy with your lawyer as well, reach out to me. And if you just want me to review your auto policy to let you know what you're protected for or what you're not, feel free to give me a call. My cell phone number is 850-321-0888. We're here to help you.
We're very short on time, guys. Anyone's got a banger? 30 seconds left. Any drop of knowledge?
Just we talk about value a lot. So value, spending that extra penny or extra dollar could get you twice the benefit.
Yeah.
But again, if you're not sure what it is, talk to somebody like myself or the gentleman around the table to help.
What's the price of peace of mind? And that was an excellent conversation. Thank you, guys. Thank you for sitting around the fire with me. Thank you to listeners at home. We will see you next week.
That concludes today's episode of the Gentleman's Tribe Show. If you found value in this conversation, we invite you to share it with someone in your circle who's walking this path of growth and leadership. Until next time, stand tall, speak truth, and continue becoming the man you were called to be. We'll see you next week.